Good morning. It's Market Day Report. We're glad you're with us here on a Thursday. Weekly export sales numbers are out. We'll break those down for you in a moment. First off, how did we end the overnight session? Let's go to the corn market. Good place to start. Mixed trade. Now, the corn market in the day sessions, not counting the overnight sessions, day sessions has settled lower now 3 consecutive sessions. And in the overnight, down a penny, 439 3/4. What about the beans? Well, beans have been down, at least the old crop, 3 consecutive sessions as well. In the overnight action, old crop was a little higher. November up 5 1/4, 1027 1/4. I do want to throw in soy meal and soy oil. Meal higher across the board, and oil higher across the board, and I'll explain in a moment why we wanted to throw those in. Wheat market, Chicago 534 1/4, unchanged. Hard red, July up 3/4 cent, 530 1/4, and spring wheat December 2 3/4 cents higher, 635. Cotton market, New York, December 24 lower, 69.01. All right, Brian Hoops is with Midwest Market Solutions. I wanted to make sure I got soy meal and soy oil in there because we had some decent numbers in export sales.
Yes, we did. We've got no shortage of things to talk about this morning, Tony. Export sales, especially for corn this morning, just an outstanding number. It was 65.5 million bushels. You can say what you want about the futures selling off here in the last 2 weeks, and everyone's kind of scratching their head why we'd be back near these lows that we're at. But it's not been because of export business. It's been very strong. Ethanol demand has been strong. We're going to look for Monday's report to reflect that strength, with USDA increasing exports, tightening the balance sheets. Plus, you had a couple more private sale announcements this morning of corn. It was 205,000 metric tons sold to Mexico, 115,000 corn to an unknown destination, and then you had a soybean sale of 225,000 metric tons to Pakistan, all announced this morning. Now, soybean sales were okay on the export report, 13.8 million bushels. The wheat, we only have a couple of weeks left of the marketing season, so we're rolling out of the old crop to new crop. Old crop only 2.6 million bushels, but the new crop a robust 18.1. So when you combine those years together, you're looking at a very strong wheat number as well. I think it's reflective that the dollar's been weak, that corn prices, wheat prices are fairly cheap, and we're starting to see some buying interest come into the marketplace. Of course, a lot of this buying interest in the overnight is being fueled by speculation that we are starting to reach some trade agreements. President Trump has an announcement this morning. He says we will announce a major trade agreement. It's rumored to be United Kingdom. It's also rumored to be 10% tariffs will remain in place. But the trade is hoping that this is a domino effect, that once you get one country to sign an agreement, other countries will follow suit. And so we've seen moves in a lot of markets, crude oil, stock market, grains, all these markets that are heavily dependent upon exports moving higher as a result of, some speculative type buying.
Hey, Brian, I'm glad you said that about UK and exports, because we were really close to having something worked out in the first administration, and the beef industry was really excited about it. So how about we take a break and we'll come back and we'll talk more about beef and pork. Market Day Report continues in a moment. Cash cattle already this week. Early in the week, 218 to 220 in the south. What about the north? Well, the asking price is 225, and we're not seeing much movement. Maybe later today or tomorrow. All right, how did we settle the session yesterday? It was red across the board. June live cattle, 212.52, down $1.15. Dollar lower on the August at 208.37. I heard Troy Appelhans from Cattle Facts talking a week and a half ago, and his comment was they expect to be trading for the rest of this year in that 2 to 210 range, and that's kind of where we are on those deferred markets. What about the feeders? Feeders, we hit $299.65 on the August, just 35 cents from the 300 mark, but couldn't really build. $298.60 at the end of the session, down 60 cents. And then the hog trade yesterday made it 3 consecutive days lower. One exception, July contract moving higher. Let's go back to Brian Hoops, Midwest Market Solutions, and let's kind of work these export numbers in here as well. Kind of disappointing on the export sell side.
Yeah, especially for the beef market, Tony. So beef sales dropped to only 7.6 million tons this week. That's not a market year low, but it's a pretty poor number. Now, part of that is because China canceled about 5.5 million tons of previous U.S. beef purchases. If they wouldn't have canceled, we'd be back in our normal range that we've seen over the last several weeks. So we're really dependent on exports. China is one of the big customers here for beef and for pork, and pork sales were okay. They dropped from last week, but they were still around 24 million tons, so not a terrible number. Market's probably a little disappointed with those beef numbers. We also had a low cash cattle trade yesterday, 219, so that's another dollar higher than the last week, similar to what we saw on Tuesday from 218 to 220. The market really started to see a little profit taking yesterday because we lack momentum to take out and make new highs. And that's kind of the thing I think you really have to watch if you're a technical trader here, is if we're able to make new highs, we should be able to sustain gains during the session. If we're unable to, we may see another round of profit taking hit this market. But everything from a fundamental standpoint, similar like we've talked about in corn, still looks very positive. Stronger cash trade, strong demand for the feeders. Exports a little bit softer this week, but overall cutout values are improving. Packer margins are not improving very much. They're still deeply in the red, but that's what happens when they have to pay higher money for the cash markets, and the numbers are expected to be tight in the second quarter. Those cash markets are not going to fall out of bed anytime soon.
Yeah, Brian, and again, when we talk the exports, beef industry really excited about a potential deal with the UK, different than the EU. Okay, UK, this trade deal could open the door for more beef going in there, but this also comes at a point when we're pretty tight on supplies, and what we may need to export are the cuts we don't normally consume. So just something to keep in the back of our minds. Brian Hoops is with Midwest Market Solutions. We'll see you back here tomorrow.